So let's start with the fundamentals. Eva, what do you see on Salesforce right now?
We like them. They've made a huge improvement with their profits. And the big news here is that their SG&A, sales general and administrative costs, have dropped from 55% to 44%. And that enabled their EBITDA margin to explode from 14% to 26%. Now, the big news, though, is that their earnings before tax went up 20 times in 2 years. It's a very, very unusual statistic. This is why we like them. And on a relative valuation basis, they look great. The total enterprise value to EBITDA is 25 compared to 38 for their peers. And on a forward price to earnings ratio, they look great, 20% below their peers. An unusual time for growth for this company. We like them.
All right, that's the sort of fundamental story. On the technicals, Carter, what do the charts say about CRM?
Right, so a couple of things sort of stand out. One is, of course, the recovery in the stock right back to the penny to its 2021 peak where it struck its head. So all the makings of a double top. And then we know the relative performance, which is what defines alpha of CRM to the S&P 500 application software sub-industry group, peaked in 2014. And relative performance of CRM to the S&P 500 technology sectors peaked in 2019. So we have poor relative performance. We have a chart pattern that is quite sort of clear at this point, putting in a double top. And its day-to-day price volume correlation is very poor, relative strength poor. I think the risk is you get a workday type outcome in CRM's earnings.
Interesting. So a little disagreement there. Let's look at the options bets. David, it's up to you to split the tie here. What do the derivatives say about Salesforce?
So options are pricing in about a 6% move on the event tomorrow night. That's about in line with how options have priced this catalyst going back in time. What sticks out to me is that this is often a 2-day move for Salesforce. There's typically follow through the day after. So I'm looking at it more as a 2-day move when I'm evaluating if options are cheap or rich. And I think they're priced relatively low because the last 3 times Salesforce has reported, the 2-day move was quite large. It was up 6%, up 13%, and up 5% each of the last 3 times. And also, as just mentioned, software has been a volatile sector. Last week, Workday was down 15% on earnings, and there's been follow through to the downside each of the last few days. So I think that options may be underpricing the Salesforce earnings event tomorrow. And the line that sticks out to me that people seem to be playing are the May 31st 260 puts. So playing for possibly some downside hedging long stock positions is what I'm seeing.
All right. So that kind of gives you the panoply of options there. While we have all of you, we also want to get your picks based on your area of expertise, kind of outside the world of Salesforce as we broaden it out to the whole market. So, Eva, on the fundamentals, what stock jumps out to you here that you think is a buy?
I'll go with a competitor, Oracle. So they're known for their profits. It's a $52 billion company, $12 billion in profits. That's a very profitable company. EBITDA margin is 40%. That's double their peers, which is 20%. And on a PE basis, they look great. Half their peers, 32 compared to 56 for the rest of the category. And every relative valuation metric that we are tracking looks very promising here. And also that's a slow and steady. It's a 10% revenue growth company. And in this market where we're uncertain of whether and when we'll see any rate cuts, I like slow and steady. I think we like slow and steady. Slow and steady will win the race.
All right, let's go on to the technical picks. Carter, which stock are you choosing and why?
Well, also an earnings play, and this is on Wednesday, Marvell Technologies, a semiconductor that is yet to even return to its former high of the past 3 years. We know that many big stocks, NVIDIA, for instance, and the SOX index itself is now making new highs, whereas this stock is a catch-up play. And so we're thinking back to about 100, Marvell on the long side, earnings Wednesday.
Okay, finally, then, let's turn to the options. And David, you're picking a name way outside the world of technology. Well, you know, you're picking Wells Fargo. Explain.
So Wells Fargo's setup is quite interesting from an options perspective. And I think there's 2 distinct time frames over the next month or so. From now until June options expiration, there could be a ceiling on the stock. That's June 21st, because there's quite literally a call wall at the June 62.5 strike. There's pretty heavy open interest there. It seems to be sellers to open of these calls. And what that does, if the stock rallies, it could slow trading down in that range, and it can make it very difficult to to get through that level. And then the stock could trade more freely after June expiration. This is just in time for what should be the release of the bank's Fed stress test out the last week of June. And this is often a very large catalyst for the financial sector, notably Wells Fargo, where it's moved about 5.5% on average on an absolute basis each of the last 4 events, and options markets aren't pricing much in. So what I would do is buy a call calendar. I would lean into this call ceiling, and I would sell the June 62 calls, and I would buy in the June 28th 62 calls and hopefully get some very cheap upside for the potential Fed bank stress test catalyst.